The difference between tax avoidance and tax evasion is exactly 20 years in federal prison, and yes, someone will absolutely try to sell you the wrong one. Right now, social media is flooded with financial gurus, packaging illegal schemes in professional thumbnails and confident energy, and people are buying it. Let's talk about what's actually happening out here, because the misinformation is genuinely dangerous. We're not talking about a gray area or a technicality. We're talking about criminal charges, asset forfeiture, and a jumpsuit that does not come in your size. You've probably seen the content. Use this one weird trick to pay 0 taxes on your business income. It sounds bold, it sounds rebellious, and it usually involves a religious loophole that sounds just technical enough to feel legitimate. The scheme being pushed hardest right now involves something called 508c1a, and we need to unpack it slowly because the devil is entirely in the details. 508c1a is a section of the Internal Revenue Code that allows churches and certain religious organizations to operate as charitable entities without going through the traditional 501c3 application process. That sounds like a shortcut, and technically it is, but only for actual churches, not for your LLC doing $40,000 a year in consulting. The moment you try to piggyback your business onto that structure to dodge taxes, you've crossed a very clear legal line. Here's the metaphor that makes this click. Imagine there's a VIP entrance to a building that only clergy can use. 508c1a is that door. Some influencer is out here selling you a fake badge, promising it'll get you in, but the security team has facial recognition, the IRS kind. And unlike the club, there's no just this once. The sales pitch sounds deceptively reasonable at first. You send money to a church, the church is tax exempt, so your money is now tax exempt, right? Wrong. And the IRS has heard this argument so many times, they've built entire enforcement divisions around it. The core issue is what tax lawyers call private benefit. If you control where that money goes after donating it, it was never really a donation. Think about it this way. If you hand someone a $20 bill, but keep your hand on their wrist, you haven't given them anything. The IRS sees the hand on the wrist. They always do. And suddenly, your charitable contribution is just unreported income wearing a costume. This is where people go from owing back taxes to owing back taxes plus fraud penalties, plus potential criminal prosecution. Now, to be completely fair and balanced here, charitable giving is a completely legitimate and powerful tax strategy when used correctly. If you genuinely want to give to a church or nonprofit, and you have no intention of controlling or accessing those funds again, then yes, you can absolutely reduce your taxable income through documented charitable contributions. The key word there is genuinely, and the IRS is extremely good at distinguishing the genuine from the theatrical. The historical pattern here is so consistent, it's almost boring. Every decade or so, a new tax shelter scheme goes viral, thousands of people buy in, and then the IRS issues guidance, audits begin, and suddenly everyone needs a defense attorney. We saw it with abusive partnership shelters in the 90s, we saw it with offshore account schemes in the 2000s, and now we're watching the 508c1a grift play out in real time on YouTube. The names change, the consequences don't. Here's the misconception we need to kill right now. Tax avoidance is not the same as tax evasion, and knowing the difference might literally keep you out of prison. Tax avoidance is using legal strategies, depreciation, deductions, business structuring, retirement accounts to reduce what you owe within the rules of the game. Tax evasion is hiding income, fabricating deductions, or running money through fake structures to escape taxation entirely. One is strategy, the other is a felony. The practical lesson is straightforward. If someone is promising you a strategy that sounds too good to be true and involves moving your money through a religious organization you suddenly control, walk away. Better yet, run, and then immediately find a licensed CPA or tax attorney who will look you in the eye and explain why that plan ends in handcuffs. The 5-minute video that explains how to pay 0 taxes is not a substitute for a professional who has passed a bar exam and has malpractice insurance. Discipline in financial strategy means resisting the flashy shortcut and doing the unsexy, documented, defensible work instead. Position yourself in legal structures, maximize every deduction you actually qualify for, and build wealth in ways that don't require you to cross your fingers every tax season. The people who win long-term at business aren't the ones who found the cleverest loophole. They're the ones who built systems they could stand behind in an audit. At the end of the day, the game of business rewards people who know the actual rules, not the rules someone made up on a podcast. Consistency, professional guidance, and legitimate strategy will always outperform a viral scheme that promises everything and delivers a federal indictment. Be the person in the room who's not nervous when someone mentions the IRS. And if you're ready to build real, lasting wealth through strategies that actually hold up, check out our links in the description below, whether you're interested in real estate investing, home contracting work, or finding the right lenders. We can help you get started the right way.